Hello traders, you're welcome to this video. In this video, we are going to be discussing how to trade consolidation in Forex. Okay, so mastering consolidation in Forex trading, it involves the use of price action strategies, and then it can be really rewarding if you know how to identify patterns and spot breakout opportunities carefully. Okay, so now we're just going to be looking at some things to consider when you want to trade consolidation. First of all, what is a consolidation zone? We should understand what it means. Okay, so basically consolidation zone is where the market moves sideways. As we can see, this is an example. It's where the market moves sideways. You can see it was not trending upwards, it was not trending downwards all the way around this point. In fact, even up to here, you can see market was just moving sideways, right? From around here to here. You can see this was consolidation. The consolidation around here before a breakout finally happened. Okay, so now it's often referred to as a range bound or sideways market, and it happens when neither buyers nor sellers are in control. As we can see, none of them were dominating the market. Okay, in this phase, the price fluctuates within a defined support and resistance zone, waiting for a breakout. Now, how do you identify consolidation patterns? To spot consolidation, you should look for a tight range. A tight range where price moves in a limited range, such as this is a perfect example, bouncing between clear support and clear resistance. Now, secondly, you can decide to use moving averages for additional confirmation. Moving averages 9, 20, 50, we can consider using that. So I'm just going to add them to our chart. Let me add the 9 first, 9 EMA, and then I'm just going to add the 20 EMA. Okay, and then I'm just going to add the 50 EMA. We are using these for confirmation. Okay, now when you have flat moving averages in consolidation, moving averages like this, the 9, 20, or 50, they flatten out, indicating the lack of a clear trend. You can see, unlike this place where the moving averages were going up and even spreading apart for a while, when it entered into this channel, you can see that this one crossed over this, the 9 crossed over the 20, and before you know it, the three moving averages crossed over each other and started moving sideways and all. Then it was after the breakout that they now started spreading apart again. So these flat moving averages can indicate a sideways market. And then another thing to use to identify consolidation patterns is candlestick clusters. Price action tends to form clusters of candlesticks with small bodies, okay, and overlapping wicks within a tight range. For example, we can see some candlesticks with small bodies. See happening around here, here. You can see here. You can see here. You can see here. So when you begin to see such occurrence, when you begin to see such thing happening, it can indicate that that indecision in the market, neither the bulls nor the bears are dominating. So there is no much energy, there is no much momentum, and that's the reason why you'll be seeing candlesticks with small wicks. You'll be seeing candlesticks with small wicks because of the lack of momentum, in the market. Okay. Now, some common consolidation patterns include rectangles, just like this. This is like a perfect example of a rectangle. We can see this is a rectangle. So the rectangle is one of the common consolidation patterns where price bounces back and forth between horizontal support and resistance. Now, another one is triangles. The range tightens as the price forms lower highs and higher lows. Let's see if we can find such triangle pattern. Let's just see if we can find such. Okay. When the price forms lower highs, note lower highs and higher lows. So it's neither a bullish structure nor a bearish structure. When you see such formation, it indicates when you see such formation, it indicates a consolidation. And the range tightens. The range tightens the more the price gets towards the point of convergence. Okay, I'm just going to use this as an example. We can see that although this is not exactly a perfect example, but it's because I couldn't really find a perfect one. But I'm just going to use this just to explain. So we can see that here we had lower highs and higher lows. Okay, normally there should be enough space. Okay, this is not exactly the pattern because it did not even stay for long, one, and this is more like a horizontal. You can see this is even a horizontal range that happened here. So I'm just using this to show an example of how a triangle consolidation looks like, because you can see that it was mostly horizontal. This was like more like a false breakout that happened here. It was not exactly a false breakout, it was a real breakout, but the breakout did not tarry for long. Yeah, because there was a retest and then it came down. It's just that the breakout did not really result in a long bearish move, but the breakout was valid. So just going to remove this back. Okay. So basically, if it was a triangle consolidation, you would see something like this: lower highs, higher lows. It would probably form over a while, and then when price finally breaks out, you could see a significant movement. Another consolidation pattern that usually happens is the flags and pennants. Yeah, although it may not really be very common, but it occurs after a strong trending move where price consolidates in smaller range, forming a flag or pennant before continuing the same direction. Okay, so I don't know if I can find a flag pattern here. It's not really always very common. Okay, but a flag pattern is the one that you would have the flag pull. There is going to be a strong momentum. For example, if it was a bullish move, you have a strong buying move, and then you would see price consolidate somehow in the downward direction to form a flag. You know how a flag looks like. So we're going to be having something like, you have a price that just went up, and then you have some consolidation that just happened somewhere, perhaps something like this, forming a flag. So after that flag forms, um, you could see a breakout either in upward direction or in the downward direction. Okay, all right. So now how do you spot breakout points? Okay, spotting breakout points is actually obvious. Of course, when price exits a consolidation, this means that a breakout has occurred. Although you should wait for a retest just to show the validity of that breakout. You wait for a retest and then you can enter the trade in the continuation of the breakout. Okay, and then you can make use of volume indicators. The volume indicator usually shows a spike when a valid breakout occurs. There's usually a spike in volume. Okay, there's usually a spike in volume whenever we have a breakout. Let's just look for a good example. So we can see that around here, when this breakout happened, you can see that compared to the preceding volumes, you can see that there was a spike compared to the preceding volumes. You see there was a spike right after this breakout happened. So you can use this for additional confirmation. Okay. Now some tips to profit from consolidation trading. Trade the range. Okay, if price stays in a consolidation for a while, you can trade between support and resistance. Okay, you buy at support and you exit your buy at the resistance, and you sell at the resistance and you exit your sell at the support, and you just continue like that. Although it is good if you have a tight stop loss, okay, because at any point a breakout could happen, so make sure you have a tight stop loss. Okay, all right, so now you can also trade a breakout. The safest way to trade consolidation is by waiting for a breakout. You can enter the trade after the confirmation candle, okay, either during the breakout or on a retest. But I would advise that you wait for a retest. Some people usually enter immediately after the breakout happens, but the reason why it's very risky is that it could be a false breakout. So when a breakout happens, it's good if you can wait for a retest. Okay, so can we see that on the smaller time frame we had a retest? After the breakout happened, you can see that price came very close to the resistance. So after that retest, you could have now considered entering, and you can see that if a hammer even formed, a pin bar, can we see, showing the bullish continuation, would have been a good point to enter. Okay, so when you are trading a breakout, you might want to place your stop loss just outside the consolidation range. Okay, you can consider placing it below the candlestick pattern. If you had a candlestick pattern form, you can place your stop loss below the candlestick pattern. Okay, that is if it is a bullish, or if it's a bearish, you can place it above the candlestick pattern. Okay, then as for your targets, you might want to use previous trend lengths to set profit targets, or you can target the nearest resistance and support levels. Okay, you can also use other indicators for additional confirmation. Okay, so basically that is it. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Thank you for watching, and happy trading.